What's up everyone, this is Tony with JRNYcrypto. In this video we're going to be talking about Mr. Gox, the crypto trading hamster, and why he's outperforming the S&P 500 with his crypto trading portfolio. And we're going to talk about why Mr. Gox the hamster could be a better crypto trader than you, and how you can improve your crypto trading strategy as well. So before we get started, I do appreciate if you guys like the video, subscribe to the channel if you haven't already, and hit the bell to be notified for regular crypto videos. So we have a new member in the crypto space. His name is Mr. Gox, the crypto trading hamster, and he has been trading cryptos since around mid-June so far. He was off to a rough start, but now doing better and even outperforming the S&P 500 with his cryptocurrency portfolio. So in this video, I'm going to show you guys how this hamster does his crypto trades, why this is actually very important, and how this can actually help you improve your crypto trading strategy and get better return on investment with your crypto trades and make better decisions. So this is actually really interesting. This has been in mainstream media because it's actually outperforming the S&P 500 at this point. Stock market not doing that great over the past couple weeks, as you guys know, with all the fear in the space. Also dragging down the cryptocurrency space, which is actually holding up pretty strong. So as of Monday, Mr. Gox has seen gains of 16.6%. And the S&P 500 has only gained about 4% over that same time period. So 12% better than the S&P 500. Since about mid-June. So pretty much any cryptocurrencies you invested in the top 15 have pretty much all gone up. Of course, some much more than others, but how this hamster actually does his trades is very interesting. I'm going to go over this real quick. So Gox's owner set up his hamster wheel to rotate through several cryptocurrencies while spinning and stopping on one when Gox exits the wheel. This is called the intention wheel. So after the crypto is selected, Gox can run through either the buy or sell decision tunnel in his cage. According to the Twitch account that streams Gox's trades, his choices are sent over to a real trading platform. So there's actually a video of this I'm going to quickly show you guys some clips of. Pretty funny. So without prior trading experience, Mr. Gox started his day trading career with a bankroll of just 326 euro. With the entire world watching live on Twitch, he placed his first buy order for XLM on June 12th, 2021. So how he makes the buy and sell orders is crawling through one of these tunnels. It automatically puts through a buy or sell order for whatever cryptocurrency it's currently on here. And then as you guys can see, anytime he runs in the wheel, it does scroll through different cryptocurrencies here in the top 20, whatever one it lands on when he gets out. It'll make buy or sell orders for that cryptocurrency. So that's basically all there is to it. In the top right here, as time goes on, it shows the crypto balances that it has acquired, and then it does give a summary of the most recent trades as well. So after more than a month of trading, Mr. Gox has placed a total of 95 orders, so around an average of 3 orders per day. He is currently down to 23 euro with a loss of 7.3% his original deposit. So that's the thing. This video was posted July 25th, and the crypto market did bottom around July 20th. So definitely a bad time here, which is why Mr. Gox's portfolio was down. He did enter the market still with his initial investment around the end of June, which was actually a good time to get in after the markets crashed and when there was a lot of fear in the market, when you actually got your best entry points. So that's what I do want to talk about as well, is why this hamster is actually outperforming the S&P 500 and doing better than some crypto traders as well. It's because the hamster has no emotion to this. It's just random and sporadic. Which actually makes for better trading than many people would think, since they do act out of fear. So that is something I do want to talk about here, is how to avoid emotional investing. I have gone over this before, but this topic is very important here. So if you are investing out of emotion, you're most likely selling when there's mass fear and panic in the space. That's usually when the market has already dumped, unless you do sell immediately when bad news does break. But more often than not, you're not going to see it until the market has already crashed, and then acting out of fear and acting out of emotion is going to have you selling at a loss. Also, just the opposite, when there's a high level of greed in the markets, people generally don't want to take profits, and they think we're going to continue going upwards forever. That's generally when everyone thinks we're going to do another 10x in the markets and everything is extremely bullish. If you look at a fear and greed index, we will be in the high greed level, and that's generally where you want to start considering taking profits on the way up, because nothing goes up forever. And if it does continue going up, that's fine, but if it does crash, then you will have money to actually buy that dip and increase the total amount of cryptocurrency that you have. So this can make for a better trader by reversing this psychology. So Investopedia.com does a great job of summarizing how to avoid emotional investing and why this is so important. I do recommend understanding this as much as possible. Using this reverse psychology and applying it to your entry and exit strategy can make you a much better crypto trader in the long term, which is why I think Mr. Gox actually does so well, is because he's not keeping up on the crypto news. He can't make emotional decisions on his trades, and it's just random and sporadic, which actually does better sort of like bots than actual humans that do trade out of emotion. So trading out of emotion is definitely not a good idea unless you are able to catch it at the very beginning. Then you can make some good trades there, but usually you have to be sitting at a computer doing this full time to be able to day trade like that. So the key to understand the motivations behind emotional investing is to avoid both euphoric and depressive investment traps that can lead to poor decision making. So key takeaways: investing based on emotion, greed, or fear is the main reason why so many people are buying at market tops and selling at market bottoms. So this is the majority of retail investors, as we can see with the crypto charts in general. Basically, the crypto charts here, if we go to crypto global market cap, this is going to directly reflect the emotions of retail investors here. So as we can see, there was mass greed here in end of 2017 when Bitcoin went up to 20,000. Everyone said Bitcoin was going to 100,000 at that time. Everyone was so bullish, and then it quickly dropped off as mass panic kicked in. Pretty much crypto just wasn't ready at the time. There was long transaction times of 4 hours to send Bitcoin. The transaction fees were crazy, $20 to send a Bitcoin transaction, and even more on Ethereum with the gas fees, as you guys know. And as we can see here, we have had a mass level of greed again. Lots of fear kicked into the markets after that whole Elon Musk thing and China flood and all that stuff that did happen, causing the market to bottom on July 20th here, and things have been getting greedy again, now entering another level of small fear. With everything in discussion right now, people thinking the stock market's going to crash, that's also affecting cryptos. So this pretty much directly reflects human emotion and the general sentiment of emotions of crypto traders. So it is good to really understand this, and keeping up on the news, you can become a better day trader from this. So very important piece of information here: dollar cost averaging and diversification are two approaches that investors can implement to make consistent decisions that are not driven by emotion. So very important, especially if you are a new crypto investor, dollar cost averaging is a great way to develop a long-term crypto portfolio. So I do have a video on my dollar cost averaging strategy, which is slightly altered than the commonly known dollar cost average strategy. So basically I do save up and I buy all the dips doing dollar cost averaging. And if you guys do want to check out that full video, lots of great in-depth information here going over both my entry and exit strategy and how you guys can also use this to be very successful in the long term. Just check out the pinned video on my channel here called My Crypto Strategy for huge profits and long-term success. If you want to learn even more and develop your crypto knowledge further, I do have a crypto guides playlist here, around 20 videos of great information on many different topics in the NFT and crypto space. So very important, by implementing this strategy on how to avoid emotional investing into your entry and exit strategy, you're going to be much more successful in the crypto space. I've been doing this for years, and overall my return on investments have been huge. Just by not acting out on emotion in the general markets. So by doing this, you're actually going to flip things around, and you're actually going to get excited for big market crashes where you can pick up some of the best deals. And if you're taking profits on the way up while everyone is greedy and they're not wanting to sell, thinking they're going to do another 10x, you're taking the profits out as you go up, then you do have a fund along the side, especially if you're saving up from every paycheck that you're getting as well. You're gonna have a big fund for buying these massive dips every so often, and over time that really does add up by picking up great deals in all these major dips instead of buying when everyone else is buying, when there's mass greed in the space and everyone is extremely bullish. If you are at a peak price and you're buying a crypto, it's more likely than not going to have a correction at some point. So if you guys do end up acting out of greed and buying at a peak price, you should be willing to hold it very long term, understand the project, know what they're building, and have faith in that project in the long term, because more likely than not it will have a correction and you may have to wait quite a while before you break even or you're in some good profit. So for instance, I do want to talk about Avalanche as a good example for this. So if you guys have been keeping up on AVAX, it has had a huge rally recently, going from around $10 to $15 here at the market bottom, beginning of August here, to now around at 5x, over $60, even peaking out over $70 at one point. Huge return on investment in a short period of time. So anytime there's mass fear in the markets, people that got in just at the beginning of August, they're up massive. So they're going to be more willing to take profit off the table, which will crash the price here pretty quickly if the fear is bad enough. So you do have to be aware of that as well. And if you do buy at a peak price here, like we saw Avalanche rallying at the beginning of February here, it peaked out. A lot of people did buy this peak price here because they thought this was just going to continue rallying. It had a massive correction down to $25, pretty much a 50% crash here. And then you could have had multiple great entry points here to buy major dips, which I was doing. And then I continued buying throughout this entire market crash as well. And I did get one last good purchase here around $10 to $15. So a good example of how I used my entry and exit strategy to pick up every major dip here along the way for the past 6 months. Buying every major dip in AVAX paid off huge. As you guys can see, I did good research into the project. I believed in it for the long term. So I was willing to continue buying the dips as we went instead of just going all in at a peak here because there was massive FOMO. Everyone was talking about the project. And then you wouldn't have even been in profit again until the markets started rallying again around end of August here. And even at the peak here, you wouldn't be in too much profit if you did buy around $50 in early February. So just something to think about and how you can alter your entry and exit strategy. I do recommend watching my pinned video on my channel if you do want to fine-tune your strategies and get better return on investment in the long term. I do recommend that. So that's it for today's crypto video. I hope you guys found it useful and enjoyed it. I do recommend following me over at Twitter as well, at JRNYcrypto. If you guys want more regular updates, I post breaking news as it happens. I post other thoughts and some good NFT and altcoins I do come across as well. If you do want more time-sensitive information, I do recommend being on crypto Twitter, especially if you're getting into NFTs. This is a great place to get started, to get integrated into the community. You'll probably meet some great people as well. And if you do want to find stuff that is a hidden gem and you want to be ahead of the herd, definitely need to be on crypto Twitter and be following some good accounts. So that's it for today's video. I hope you guys found it useful. I do appreciate if you guys liked the video. Comment below, let me know what you guys thought about this video, and if you guys share this anywhere, that does help the video as well. You can also subscribe and hit the bell if you do want to be notified for my regular crypto videos. Again, thank you guys so much for watching, and I'll see you guys in the next video.